Hey climbers, welcome back to Climb by VSC, a weekly show about building and scaling startups in the world of climate innovation. My name is Jake Kapoor, general partner of VSC Ventures and co-host of Climb. Every week, I or a member of our VSC team will speak with a pioneer in the climate tech world about emerging technologies and novel ideas that will turn the tide on climate change. We've all heard enough of the doom and gloom. It's time for stories of purpose-driven innovation that lead to sustainable, positive change. As always, I'm so happy that you've decided to join us. Now let's climb. Hey folks, welcome to another episode of Climb by VSC. Today I am thrilled to have on the show VC investor Shawn Xu, who is currently the chief of staff at Lowercarbon Capital, a fund that many of our listeners are intimately familiar with or at least have heard of. Shawn believes in audacious founders and bold solutions to the climate crisis, so we wanted to have him on Climb because he's not just an investor, but he's also a community builder and helping to build Lowercarbon's platform and founder products. So a little bit of background on Shawn. He's partnered with over 50 companies to date, helping him build a wealth of knowledge from companies going from 0 to 1, ideation to product market fit. And prior to this role, Shawn, what haven't you done, man? You were at On Deck, you were at First Round, you were at Floodgate, and you've also, where I became familiar with your work, run some fantastic newsletters like the Anchor List and the Next Gen newsletter. Shawn, welcome to Climb, and thank you so much for joining us.
Hey, thanks for having me, man. Really excited to chat climate and to talk a little bit and nerd out a little bit about investing in this space with you.
That is what we do here. We love to nerd out on climate. So maybe just to cap your experiences a little bit, because I gave a very, very quick download there.
Sure.
Talk to me about how those diverse experiences, we didn't even talk about, tech policy advisor to Gavin Newsom and some of your investing roles, how that led you to now focusing on climate-focused startups as an investor.
Yeah, that's a good question. I think a combination of things. When I was an investor at Floodgate, I was really trained by the partners there, Mike Maples and Americo, to think about investing in terms of inflections, major change events in the world, right? And the most interesting change events that matter to me are technology change events, regulatory change events, behavior change events, and all the inflections oriented around climate tech were becoming too obvious to ignore, right? A lot of the inflections are around the energy transition becoming inevitable, right? A lot of the regulatory inflections with the IRA passage, as well as some of the regulatory frameworks that are emerging in Europe, even before some of the stuff that we're seeing here in the U.S. It was just became too interesting to just say, hey, this is not going to this space is not going to happen. It's the dollars are pouring in. The corporates are becoming voluntary buyers and voluntarily committing to hitting certain targets with regards to sustainability and hitting net zero. And so I was just really captivated by that. So at Floodgate, I made the first investment in the first carbon removal investment in the fund. And so that really got me excited about that space. I started seeing a lot more founders interested in climate. And so, that's also a signal for me to spend some time there. So I've been in and around climate for a long time. And when I got introduced to Chris, a lot of things came together and it really forced me to really think about how to spend all my time thinking about investing and building climate tech companies rather than just spending, a quarter of my time or half my time spending time there. And so I think Lowercarbon's a really special place, and Chris is a really special person to go work with and go work for. And the confluence of all those things got me excited about spending my time at Lowercarbon. That's a little bit of a long answer, but that's the truthful one.
No. It's very helpful context. And I know most of our listeners are familiar with Lowercarbon. Those that maybe are not yet, $800+ million fund focused on unfucking the planet, as Chris likes to say. Maybe help us understand, now it's been in a couple of years since Lowercarbon was launched. Talk about your role within Lowercarbon. What are the responsibilities of chief of staff? How do they differ from those that you've been doing in the past as, sort of a pure investor?
Yeah. To be honest, I don't think it's all that different. When every chief of staff role is a little different depending on where you go, but how we worked it out with Chris and with Clay, our other managing partner, I want to say I spend anywhere between 50 to 75% of my time still focused on investing, right? Yeah. I'm, been a generalist software investor for most of my investing career. And so I still look pretty closely at all the software companies that come through Lowercarbon. I ended up being particularly interested in energy transition. And so that's where I get to spend my time. I work a lot with our companies focused on electrification and energy transition here in the US and Europe. And, also plugging in where I can be helpful around go-to-market and just understanding commercialization for a lot of the deep tech companies. I found this really wonderful place to be able to spend time with folks who have 2 PhDs apiece and really understand the science and really can understand the climate impact of some of these companies. Before I was an investor, I was working on international expansion and go-to-market for companies like Square. And so trying to take a lot of what I've learned there and from what I've seen working with a bunch of companies as an investor in the generalist firms and apply that to what we're seeing here at Lowercarbon, right? And so I plug in a lot on the commercialization stuff when it comes to deep tech and trying to work with founders there. I call myself a little bit of a network Sherpa because I'm trying to connect the dots between people in Chris's network or in Clay's network and our portfolio companies, right? That could be customers, that could be talent, that could be advisors. That's just what I like to spend my time on. That's what's on my plate today, and that's how I've constructed kind of like in my own head, like the type of milestones I want to try to hit for myself and for the fund.
I guess when you sort of think about the vast landscape of climate, you said energy transition is really interesting to you.
Yeah.
Within energy transition, like, what are some characteristics of companies that you're drawn to, or even maybe generalize it, characteristics of founders in that space that you're drawn to that you say, hey, I want to spend time with this company or this founder?
Bill Gurley used to say that product market fit looks like something where they're prying something out of someone's hands because they need it so desperately, right? In energy transition, there might be a regulatory forcing function. There are companies out there where if you don't comply with a certain energy efficiency, or if you don't pass a certain energy efficiency bar, right, then you get fined or you are unable to do something. There's a company specifically that I'm thinking about in the UK where they have to hit certain energy efficiency benchmarks for being able to rent a home if it's an institutionally owned property, right? I think it's like a £30,000 fine if they don't do that. That's pretty interesting to me, right? I think that in general, there are these types of like inflections that you look for that you get excited about, right? That create new points of urgency or new points of demand for a particular product. As far as like what I look for in founders, that's the same thing that you would look for in founders in any other company setting, right? Mm-hmm. Or any other venture setting. You look for tenacity. You look for evidence of velocity. You look for folks who have a track record of execution and shipping and able to build a movement in some ways, right? Able to attract a team or customers in a way that, buying into a product or an idea that didn't exist before, right? Mm-hmm. I think repeat founders are great folks to work with because they've already, gone through the kinks of understanding what didn't work the first time they went around, right? And so you can work with them, and they know exactly how to go full steam ahead from day one, rather than having to learn some of that on throughout their early 0 to 1 process. And I think that there is something to say about this reality distortion bubble that a lot of founders have, that are able to just make people believe in the product that they're building, or that the breakthrough that they have identified is something that is commercializable and able to be built around, right? And I think that's the most, like, that's what I got involved in Venture for. One of the main reasons I think to work with some of these extraordinary founders and help them build those companies out there, right? I think that is most exciting to me.
Yeah. One of the things I was listening for in your answer that I didn't pick up on, and maybe we can elaborate a little bit, is market sizing. And I'm sure a lot of founders that are listening, they've pitched VCs before, they hear the answer, hey, this is a great company, but, we're not convinced on the TAM, or we don't, know if the market is there. When you think about the kind of companies that you look at, especially within, energy transition, but we can broaden it out. Some of these solutions are localized, or they are sort of restricted to opportunities within the US because, in Europe, there are different regulations and different sources of energy and how they're handled. How do you think about market size? And especially given the size of Lowercarbon's fund, is there a threshold of like size and success that a company has to have for it to even, make sense for you?
Yeah, I mean, of course, market size matters, right? I think that although one of the great things about climate is that we're talking about energy, we're talking about our entire industrial economy, right? Like these are not small TAMs that we're thinking about. You have to believe that there's a terminal valuation you can get to that can return the fund, right? It's like an obvious statement. I think that for us, we have generally $300 million early stage funds, and so we do a analysis for every single company, trying to understand what is the terminal valuation that this could get to. And there's 5 scenarios that could potentially play out, right? It could go to 0. In this case, this is what it goes to 0. But then there's a, knock it out of the park scenario. What does that look like? If everything went right based on what we understand about the TAM and the margins and the multiples in the market that we can see, and there's cause for optimism for XYZ variable. Sometimes there's like 10, 20 variables that we look at. This is the potential valuation of a business that can get to. And this is the ownership we would need to have to be able to believe that this can return the fund, right? At least 1x. It's more an art than a science. It's really difficult to nail this for a first checked stage company. If ultimately you need to own 20% market share for a business to be successful and get to a liquidity event that makes sense for us as a fund, that's really, really difficult. I don't know that we would back that company, right? For the most part, we want to look at companies where if they owned, single digit percent market share of a particular market, they could still return the fund and then some, right? If you look at our companies in our portfolio, like Solugen, that is, working on, decarbonized chemicals, or we have companies that are working on decarbonized steel, such as Electra, or decarbonized cement, like Sublime. Steel and cement are, if you can produce those products at lower cost or cost parity, the market is established. You understand how large that opportunity is. You don't, a commodity input product is a commodity input product. You should just be able to tap into that market, and you're off to the races with that particular opportunity, right? And so there are very well understood TAMs for some of our deep tech companies that we're excited about too. Hope that answers your question.
No, it does. And I think, look, part of it, it's always relevant for us because I always think of the Hunter Walk quote that the best companies grow their own TAMs. And so a lot of times, you'll, and you may or may not agree with that, but I sort of feel like there's a lot of times where you fall in love with the team, you have faith in the product, and you have questions about the TAM. And more often than not in my investing career, what I've found is, the land and expand model, or the company sort of solves a problem in one market and it ends up opening a much larger market that you would not have foreseen earlier on. And ultimately, given how early that I invest, and I know you invest, so much of that is just relying upon the team. That it's sort of like you can spin yourself in circles trying to figure out if the TAM is large enough, and ultimately, the company may pivot in or out of a market that seemed large or didn't seem large enough. So it does answer my question there. I guess tied to that a little bit is this idea of storytelling. And I know you've talked about this. As our listeners know, it's something that we discuss a lot, at VSC Ventures and on Climb. Talk to me about this idea of the importance of storytelling in climate tech, and especially for scientific founders, which is, I think, what I've heard you talk about it for.
In many cases, storytelling is critical to securing funding for the business, right? And I think in a lot of companies that are, a lot of the climate tech companies that are in this category of deep tech and hardware are born in labs or out of PhD research. It necessitates raising a decent amount of capital to go from bench scale to pilot scale, from pilot scale to, commercial viability. In some cases, you have to raise quite a bit amount of capital to realize that vision, right? And so it's a lot more about science risk or engineering risk than it is about market risk. It's actually more important for a lot of these deep tech companies than software companies to have an amazing ability to set a vision, to describe that vision, and then bring an audience, particularly investors, right, along for the journey, to be able to show, hey, this is something that we can possibly get to. These are the reasons why we can get to it. And if everything goes right, this is what the world will be. This is how the world will be changed. I think a little bit about a fun story in one of our portfolio companies, Carbon Crusher, which I'm pretty excited about. They're a company that's they've developed these amazing machines that look a little bit like the Batmobile, and they effectively are able to repave roads in a carbon negative way, right? They're able to basically repave roads at like a tenth of the cost, and able to do this in a zero carbon or negative carbon way. They've been growing like crazy because they're able to go to these municipalities and across Europe and now parts of the United States and share. Not only are we able to provide this service to you that is a fraction of the cost of anything that you can find in the open market, but it also has this amazing externality that gets us to not have to release a ton of carbon into the air for every single time you have to repave a road, right? And it looks pretty incredible doing it. I mean, it's kind of like something out of the future, right? And I think that they have this amazing way to tell that story that you kind of have to see to be able to really kind of grok it 100%. But when you see it and you see this machine that's actually cheaper, better, faster, you know, for all the dimensions that we just talked about, I mean, that gets a lot of people excited, whether it's buyers or investors or people who just want to support and root them on their journey.
Yeah, I'm going to double click on something you said there, Shawn, because I think it's so true that didn't exist in general tech for me, and you know where I started my career investing in software and general tech. So now when I look at climate tech, it is a very visual problem, and it sort of invites a lot of visual solutions. And we are in this sort of era of visual communication. You know, you can extend that to TikTok and Instagram Reels, but even just sort of like how we communicate socially through memes or whatever. We are in an era of visual comms. And it's so valuable when we meet founders, especially the ones that come to us and say, hey, you know, we want your support on PR. We want your support on branding and marketing, that sort of get that in order to entice customers, in order to excite future employees, in order to get that next round of capital, we need to take our core strength, which is showing a visual problem, demonstrating a visual solution, and, you know, doing it in ways that really sort of like actualizes the problem for people in a way that like software, you know, can't do. If you're building software for data centers, there's like so many diagrams that I can use. And at a certain point, like it's not a visual problem, but paving roads, well, guess what? You know, we can send a film crew out there and actually see it in action. And it just, I think, gets a new generation of companies, you know, to sort of accelerate their growth because of that.
You're so 100% correct. I mean, just the other week for LA Tech Week, we went down and partnered up with Climate Draft, which is a great platform for folks who are curious. You know, I describe it as a book face for climate tech folks. But if you're interested in getting a climate tech job, go check out climatedraft.org. And you know, you'll be able to find opportunities to plug in there. But in any case, we did this great event. Basically bringing together the aerospace community in LA and, you know, predominantly folks from the SpaceX mafia. And we got them in a room and basically pitched them on climate tech and said, hey, you should be thinking about, if you want to leave SpaceX, you should start thinking about starting a climate tech company, use your rocket science superpowers and help us unfuck the planet, help us build these climate tech companies or join a climate tech company because they all need amazing engineers who really understand hardware, right? And the way that we approached it is we had a bunch of portfolio companies. I think most of the companies that pitched were portfolio companies, and they did a showcase and basically did this pitch, sharing a little bit more about how they thought about climate, how they thought about trying to solve that with their product. And you should have seen the folks in the room. I mean, their eyes lit up when they really try to understand, when they really were able to grok and see images and photos and video of folks who are building companies that are, you know, trying to build direct air capture systems that are pretty compelling. Companies that are, you know, able to utilize the power from waves in the ocean. And when you're able to see it, and you know, these are engineers who are chasing the most difficult engineering problems in the world, who also, if they're able to solve it and actually able to build the thing, actually is able to create an enormous amount of impact and also a crazy financial outcome. You know, they were all super excited about that.
You are preaching to the choir, my man. So as I told you, we do this segment on every show called Hyper Hopeful. We like to close out with it. So I'd love to jump into that with you a little bit. Think of it as a rapid fire. I'll make a statement. We'll say Hyper Hopeful, and I'd love your sort of brief thoughts on why you feel one way or the other. So
I will say I'm an eternal optimist, though. So I don't know if this is going to work on me. I don't know. I might. You know what, Shawn?
If we don't get enough conflict here, I'll just jump in and we can debate it. Why not?
Sure.
Let's start with the IRA, Washington, government as a catalyst for climate innovation.
Yeah.
Hype or hopeful?
Yeah, for the large part, hopeful. I think we just made investments in companies that would not have been possible without the IRA. The caveat here, I would say, is that just because the dollars exist, it's amazing that the dollars exist to be able to catalyze and subsidize a lot of the core climate milestones that we need to hit, right? Particularly in energy transition. But just because the dollars exist doesn't mean it actually gets deployed and implemented correctly, right? Mm-hmm. And so we made investments in companies like Crux that's building a marketplace for tax credits for renewable energy developers to be able to get liquidity and instant access to dollars in a way that they couldn't have done before, right? And so a lot that benefits a lot of the, I think, medium and long tail. We invested in a company called Eli that is building an incentives API that is able to make sense of the dollars out there and very easily help end users access those dollars, kind of like how you would use TurboTax, right? And so, I think that the dollars existing will accelerate a lot of the climate impact that we're hoping for. And companies are now coming up to meet that challenge, right? To enable that as frictionlessly as possible. I'm pretty excited about that.
Everybody is looking at the current economic environment, recessionary economic environment. Does a recession make climate investing efforts harder? It's weird to ask it as hyper hopeful, so we'll say agree or disagree. The recession makes climate investing efforts harder. My
nuanced answer is that early stage investing doesn't really change all that much for me. I think there might be fewer founders building, but the tourist founders will leave, and the folks who are very serious and this is like their life's work type founders, those people will always stay. And they see the opportunity, and the folks who decide to go build after an opportunity and chase an opportunity during recession, those are folks you want to go spend time with anyway, right? Like they just see the inflection is too obvious to ignore. The opportunity is too obvious to ignore, and they believe and have so much conviction on a particular product that they go and decide to go build it. I mean, I want to go meet all those founders, and so it makes my job in some ways easier because there's just less noise in terms of folks who are building in the space. And in some ways, I think, valuations are coming down to reality, which makes my job a little bit easier, I think, in terms of just trying to help founders think through how do we get to reasonable milestones that match reasonable valuations again, right? And I think that's actually a healthy thing for the ecosystem.
Yeah, you weren't kidding about being an optimist, Shawn. I was expecting fire and brimstone. But no, I largely agree with you. I think so much of what we do as seed investors is also, not just look for sort of the long-term, terminal exit value, but also think about, hey, 18 and 24 months from now, does this company have a tangible path to a Series A? Or if it's a Series A, does it have a tangible path to a Series B? There's a lot of uncertainty there. And it I think, makes a lot of folks sit on their hands, which could be good in some ways. If you're an active investor, there's probably more deals out there for you to go get. But on the other hand, can create that uncertainty with your dollars of whether or not you got to be in a position to put a bridge around.
I would also say that, but at the same token, these are the investment categories in climate are. I mean, at Lower Carbon, we spend a lot of time thinking about getting to net zero, carbon removal, and adaptation. And in all three of those categories, there's a lot of non-dilutive dollars that are still coming online, regardless of whether the fact that there's a recession going on or not, that is cooling down the market. Just recently, the Department of Energy released a huge block of capital, of non-dilutive capital for fusion companies, of which I think a bunch of our companies in our fusion fund were able to take advantage, I think, of 70% of those dollars. But it was double-digit millions of non-dilutive dollars going towards R&D for fusion. And I think that when it comes to these deep tech companies that aren't necessarily contingent on some sort of like consumer budget or something like that, right? Mm-hmm. It's really, we're still talking about fundamental R&D for a lot of these products that are too important to fail in the eyes of some folks in policy, I would say, right? They're getting the dollars to kind of get them to a point where they can launch a product to actually get to a viable product, right? And so I think that that's also cause for optimism for me. Yeah,
you're jumping ahead to my third and final hyper hopeful. So let's do it now. Fusion energy's ability to have a near-term impact. Let's say within the next decade. Hype or hopeful?
I would say that I'm pretty much a hopeful on this front, just because I think it will happen a lot sooner than people realize, right? I mean, I think that people have been chasing fusion for decades, right? For the better part of the century, and some might say. There's a lot of, again, inflections that get us excited, and this is the basis for why we raised a fusion fund that are exciting for us. One area that I think could be an interesting variable here is the ability to leverage AI and simulation to be able to accelerate the R&D cycle for a lot of deep tech categories, whether it's fusion or synthetic biology or others, right? And so I think that the pace of innovation in R&D in areas like fusion are, as I understand it, to be much more sophisticated, much faster than what people tend to believe. And so will we get to a point where we can create some sort of liquidity event for a fusion company in the next decade? The answer for me is probably yes. Will it get to a point where we have commercial viable fusion that's connected to the grid that connects everybody? I think that's probably a question better left up to fusion founders and some of our partners who are spending a lot more time there. The answer I can give you is that I think it'll happen a lot faster than people will ever anticipate.
Shawn, you're the injection of optimism I needed on a Friday morning, man. This is fantastic. So let's close where we like to close with a lot of our guests. It feels like in the climate world, there's a lot of doom and gloom and, sort of challenges in terms of lack of action. But since you are our eternal optimist on the show, give us the biggest thing that gives you hope or optimism in this broader fight against climate change.
Oh, great question. Man, so I'll end with a very quick short story, which is I've been going and touring college campuses and basically meeting with student founders, right? And I think at the beginning of the show, we had mentioned that I was working with First Round's Dorm Room Fund, which got my start in. That's where I got my start in venture and found founders who were building unicorn companies when they were 17 and 20 years old and stuff, right? I think it's pretty remarkable. That age is just not a number. It is just a number. It's actually not a thing that should affect whether or not people can build great companies. And the punchline here is, I think 4 or 5 years ago, if you asked to convene all the student founders or student engineers and builders who are excited about climate and get them in a room, undergrad, graduate, PhD, you probably couldn't fill the room with more than like 10 people. You probably couldn't, right? A lot of policy folks, a lot of folks who are intellectually interested in it, but seriously building in the space, like probably not that many, right? We did an event at Penn maybe just a few months ago, and we packed the largest auditorium on campus. Wow. Must have been like 100 builders in the room, all of them actually serious builders, and we had dinner with some of them afterwards, right? And the number of smart people who are believing that the default path to success is to build a climate company, and the proportion of brilliant, smart young people who are excited about building in climate, and they have a belief that there is a path to go do it. It's not some crazy thing to go chase after a deep tech idea or to find a co-founder who can help them build a deep tech hardware product if they're more non-technical. It is just mind-boggling. There's just some of the smartest people are working on this, right? And so when you find that trend line, right, I think that's where you got to perk your ears up a little bit, and that's where I'm excited. I think the trend line will only continue to go up. So in any case, I think that's the part that the number of smart founders that are coming into climate is what I'm really excited by.
Yeah, it's a fantastic place for us to leave our conversation, Shawn. I could talk to you for hours. I'm so grateful to finally get to talk to you in person after learning from your content for so many years. So just want to say thank you so much for joining us on Climb, for sharing your insights, and for all the awesome work you're doing at Lowercarbon. We hope to continue following along and hopefully find some more investments to do together.
You bet. Hey, thanks so much, Jay. Really appreciate it.
Well, that's all for this week's episode of Climb by VSC. Thank you so much for watching and listening. Special thanks to Credo for their help in producing and promoting this episode. To visit any part of today's conversation again, you can find the full transcript on vscventures.com. Our thanks to Josue Ramiro for posting these every week. Lastly, if you've listened this far, please leave us a rating on Spotify or review on iTunes. It only takes a few seconds, really helps us out, and as far as I know, it's still carbon neutral. Well, that's all for now. We'll see you all next week on Climb by VSC.